Welcome back to Stocklabs. We're going to do another market recap for the final week of July. We finished up here. It's always nice when the trading month ends on a Friday. Kind of just has everything nice and evened out. So we'll get to see what our week finished up as. Last week, we thought that the market would be kind of just whatever, coasting into month end, and that's more or less the type of action you saw. I think it dipped a little bit Monday or Tuesday, and then sort of just floated around back up to, week to date unchanged, and it was mainly sloppy for all 5 days, and then Friday ended soft, basically. So you didn't really get a whole lot out of the indices, which was kind of expected. Our oversold stats that we were working on from the 18th or 19th. I forget what day the exact signal was, but the rally got sort of front loaded, and then this second week of trading after the signal was a little bit more muted. Just for the majors, week to date. Right. So, nothing too exciting here. Oil up 2.5%. That's, oil is a little more volatile than most things, but, nice little bounce week for that. We did, IWM finished fractionally up, 66 bips, and we did have that picked out as the outperformer on Friday as far as some of these ETFs that we track. And the SPY down 40 bips, Q's down 1%. We did have all of our, a lot of our TerraCap earnings come out, and it sort of was a wash, from the, in total for all of them. So we did say that, the expectation was that they'd move the market big, but, they really didn't. It didn't have a whole lot of effect. Did Tesla report this week? I forget. But anyway, they were up 7%. Google was early in the week. They were good, up 1%. Netflix, I think they had reported previously. But then we had the rest of these, Facebook, Microsoft, Amazon. Amazon had a big down day on Friday after reporting on Thursday, so that dragged it down. But yeah, in total, down 1%. So this was pretty soft for this group of stocks. Okay, our industries page on a 1 week basis. Yeah, you see it's kind of choppy. Utilities, nice bounce back week. They had been soft during the risk on periods, so people reallocating into them, when they're tightening up a little bit. Industrials, decent bounce, biggest performer of the week on medium basis. Healthcare got walloped again. This seems like sort of a pattern. I don't know offhand, but I just feel like a lot of times when I'm looking at this, healthcare is getting taken to the woodshed. Tech down week on a median basis, down 60 bips for median stock. And then the rest of these are, sort of like the market. Basic materials bounced 1%, but they'd gotten clobbered, I think, the last couple weeks. So, not really getting back what you lost. Financials, from recap, I don't know, maybe 3 or 4 recaps ago, financials are now just sort of like, pretty volatile class. They're just getting whipsawed around with whatever the sentiment is on rates, especially on the long end. So yeah, pretty muted week, and services flat. So yeah, a lot of stuff kind of in line with just the market being kind of wishy-washy to finish out the month. And the top sectors, yeah, this is all sort of gross stuff. aluminum, copper, steel, iron. So yeah, these bounced from in that basic materials group that sort of started to get some of its gains back. But yeah, there's only, again, for the second week in a row, there's not many subsectors up over 5%. Now, there are a lot in this 3% range. Let me just go. I mean, really not that many. So 25 on the first page, 26, 27, only 27 sectors up 3% or more on a median basis. And the worst performers, Chinese stocks, continue to get hammered. So that's probably something you just want to avoid. Good rule of thumb in general. Biotech, got dragged with healthcare, like beta healthcare. Gene editing is like, along the same lines as biotech. But yeah, really nothing here. Same as last week. Nothing sticks out way on, or I mean, the Chinese stocks are way down, but all the rest of these, the same thing. The list sort of starts heading towards the unchanged line pretty quick. So, um, you know, sloppy week, and it was kind of just hit or miss. Wherever you were, you may have gotten hit in some of these Chinese stocks, for instance. But other than that, it really shouldn't have been too problematic for you during the week. I'll go to our market cap returns. So 1 to 5 billion was 57 bips, and 5 to 10 billion, 62 bips, slightly better. Large caps are 41, so coming down a bit. Mega caps 53. Yeah, all of these are around the same. I mean, it's not anything crazy that's sticking out. And Terra caps flat, minus 1 basis point. So yeah, I mean, all of this sort of mimicked the uh, market. I mean, obviously, when the leadership tech stocks are sort of just faltering, it just puts a cloud a little bit over the market, and it's tough to get things going. Especially since when that has happened the past several months, where the large cap tech stocks sort of don't have the momentum. You usually saw the small caps ripping, but the small caps have been sort of dead money for several weeks now. So you're really not getting the rotation type trade where like money comes out of tech and goes into other stuff. It's just like some money comes out of tech and the indices just stall out. There's no other side of the coin for right now, which is, I don't know. You could say it's good or bad because a lot of times if the market's really thin, you might say that it's a little bit unstable under the surface. But also, if it's really thin, then you kind of know the handful of stocks that you're going to go to for, risk on or risk off. So, it's a double-edged sword having a thin rally like we've had here. Okay, intelligence. Where'd it go? Okay, so similar to last week, there's not a whole lot here that's too exciting on the bullish side as far as intelligence is concerned. So there's Brazil, there's real estate, corn. I mean, it's just weird stuff. I doubt many people are trading this. Big banks, whatever. We already talked about banks, sort of non-factor trade. I'll do the inverse. Hello? Why isn't it going? I didn't see the screen refresh, so let me just go back into this. -4. Yeah. Okay. Yeah, I thought that it didn't glitch the first time. All right. So what's rated as bearish for the coming week? First week of August is Hibbs. This was on here last week or last Friday. ARC and FAS, SQQQ, TIZA, and SRTY. So all bearish, or no, the ARC ETF is just a normal ETF. The rest of them are all bearish ETFs. So let's see, ARC, saying ARC's going to be soft, but then SQQQ is going to be soft too. So I don't know what that means as far as how, if you think of a scenario where ARC, drifts lower and the Qs go up, I mean, that really kind of tells you that you might see more of the same sort of action where it's just a few of the big tech stocks dragging the indices higher. Although the rest of these TIZA, SRTY, if they're down, then we should have pretty good breadth, because if Russell's up, then breadth readings are usually good, and that usually gets people more bullish, on the whole for the entire thing. So yeah, we're almost done this oversold signal that flagged back here. So these signals, stats get logged for 10 days. So we finished our 9th day on Friday, and stats pretty much came in line. I mean, it was dead on for the most part. So that'll expire on Monday close. And then, I mean, ideally, you see a little more incremental softness and get another one of these signals, because that'd be like, I don't know, it'll almost, I don't want to say easy, but it almost would be too easy if that happened. So just look out for that. We're in the summer months now, the real summer months, and seasonality for these months is soft. So it would be, probably a little wise to play things a little closer to the vest, just be a little more cognizant of what you're doing and how much risk you're putting on, because, I think last year we did see a pretty big, not big, but after the tech stocks had that monster run in August, they all came tech was dead money then for like almost a year, I think. Not a year, but months and months and months. A lot of it took for those stocks to break out of the range that they, or the high that they set during August. So I doubt that we'll get an exact repeat where there's just a big high put in a lot of the stocks in the same month, but it's just something to keep an eye on. And then September generally softens up again, and then once we get back from Labor Day, should be good to go again. So yeah, I mean, I don't know. To me, the tape all week just seemed kind of disinterested in anything. So it's kind of hard to make heads or tails out of, what that might mean for next week, starting a new month. But I would think that we might start a little bit soft early in the week, but then I would expect a rally by weekend. So yeah, I think that's basically it. Pretty easy summertime trading. So we'll see you next week. Good luck.